can be found. And then also there's other stuff on my website, boycewatkins.com and stuff like that. Okay, so first thing I wanted to mention to you guys in terms of what's going on in the markets is first off, this is oh sorry, let me turn this off. This is a really good time to be an investor. The stock market is on fire. There's been so much money being made lately, and it's just been raining money. And let's see, Justin says, I got it. You know what? Just so you know, I have to take my glasses off because I guess I'm farsighted and I broke my glasses on my last trip. So I'm wearing these other glasses. And so when I read stuff on the screen, I have to take my glasses off to be able to read stuff on the screen. So now I must be officially an old man because I got to go, what'd you say? What'd you say, Sonny? I can't hear you. All right. So anyway, let me see. Just started the option course. Any ideas on what stock I should start out doing options training? I have some money to invest. Yeah. Well, if you love you too, Justin, thank you for the kind words. If you want to sell options, my favorite is Affirm went up like 300% this year. It was a great stock. There's so much money that was made with Affirm. For a lot of people, a lot of you that have been kind of in that stock for a while know how great it's been. I like Affirm as a great place to start. AFFRM, that's the ticker symbol. But now remember though, buying a stock for the selling of options is very different from buying a stock for a long-term investment. Now Affirm so far has been a pretty good investment for this year. What's it like long term? I don't know. It's not my favorite long term stock. Another one is Marathon Digital, MARA. That's another one that if you're looking to produce the options income off that stock, the options income is good. If that's of interest to you, just so you know, in this class, we're talking about long-term investments here. But if you are interested in options, just go to drboyceprime.com. That's when we cover options. Now, let's see here. You got Body Slam by EBIX. Yeah, I hope you diversify, Kendall. That's the key. Some of these investments are best guesses. It's based on the research. Like, okay, where does it stand? What's the ROI? And then also, if a stock body slams you want to go back and look and say, okay, did I hedge that position the way that I really could have and should have? And so one of the things that we talk about extensively is one of the rules I believe that makes sense if you're talking about doing something with the selling of stock options is that remember a lot of these stocks are very risky. And with a risky stock, you want to have your insurance. And if you don't have insurance, you got to make sure that you know what you're getting into. If you can withstand that loss and it doesn't drive you crazy, then then maybe you go without a full hedge. But I think if risk bothers you, if losing money makes you upset, then that's where you take that extra money and you protect yourself. You get your body armor in position. And so even with a firm, Sharif, here's the thing. Whenever a stock is going up, I'm always looking the opposite direction. If it's going up, I'm looking down. When it's going down, I'm looking up. And so with a firm, it's a suspicious stock for me right now. It's like, yeah, would I own it? Would I buy it? I guess because I can generate income from it, but don't think that when I buy it, I'm not hedging. I'm very, very suspicious of the stock. I'm very paranoid with that stock because it's gone up so much that it's not a big thing for it to collapse. That thing could actually drop from 49 to 29 or something, if they get a bad earnings report or something, let's say it gets uncovered that they have some sort of scandal attached to how their reports were not accurate or whatever. So you got to always kind of be ready for that. And that's why you also diversify. So when you talk about body armor and things like that, let me see here. Yeah, so when I talk about body armor, Shannon, I'm really talking about buying put options, not selling put options. I'm talking about buying put options. Because remember, when you sell a put option, and this is all in, if you go into drboyceprime.com, you can learn all about options and everything. We have a bunch of stuff in there. But basically, buying put options is what you do when you're buying insurance on your stock. You're protecting your position. But there are other ways you can have insurance, like you can do stop loss orders. You can diversification in general, not putting all your eggs in one basket. That's huge when it comes to investing. Just the idea of not putting all your money in one location is one of those little things that people somehow they just forget that, and I don't understand why, because that's probably the most important rule of investing. Okay, so keep that in mind. All right, so let me just explain kind of what's happening with the economy right now. the one good thing that's going on is that the Federal Reserve has stopped hiking interest rates for the most part. There's no indicator I see anywhere that they're going to keep on doing what they were doing that was causing so much economic pain before. That is good news for you. That is really good news for you, because what it basically says is that now most of the problems have kind of come to an end. The troubles are basically over for the most part. There's nothing on the horizon that's really worrying the Fed anymore. And remember, the Federal Reserve is interesting because there's a couple things you should know about the Fed. The first thing you should know about the Fed is that you don't fight the Fed. There's just a rule that says don't fight the Fed, and what that means is that if the Federal Reserve starts hiking interest rates, you better duck. You know what it reminds me of? Just to give you a stupid little ghetto reference. Remember in the movie Friday when Debo would come by on his bike, and Debo was like this big guy that was like 6'5" and 280 pounds, and he would ride his bike, and then they would start playing the like Jaws music, like doo 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 doo, and everybody would kind of run and hide because Debo was in town. The Fed is kind of like Debo. When the Fed shows up and the Fed says we're going to start hiking interest rates, you better duck. You run. Everybody hides. You don't fight the Fed. You just don't, because you get hurt if you fight the Fed. So fighting the Fed means that when they start hiking interest rates, that usually means the market's going to start doing this. Their goal, their number one goal, their number one mandate when they had the inflation problem was pretty much to kill the economy. They literally were just like, we got to kill the economy. And so that means that they were trying to do whatever they could to increase the unemployment rate. They were doing whatever they could to slow down economic activity. They're doing whatever they could to jack up the real estate market, which they successfully did. And they did all that because they needed to slow down inflation. And now here's what was fascinating that was really crazy. In a way, it's almost like think of it like chemotherapy. You know how chemotherapy kills the cancer, but it also can kill the person, right? It makes the person sicker while the cancer is going away. So you're like, I'm cancer free, but now but the cells in my body don't work the way they used to because this chemo literally is poison put in my body. So they were injecting this poison into the economic body of America for a very long period of time because they said, look, there might be consequences, but we have to slow down inflation. So what was fascinating was that the body didn't respond the way they thought. They thought they were going to really hurt the economy, and they didn't. If you notice, the last couple of years, it's been recession, recession, recession. All this talk about a recession, and that recession never came. And a lot of it was driven by you. It made me reflect deeply on the depth of the spending addictions that we formulate as children. This is what you're taught to do in school. They're training you in school to become good soldiers for capitalism. That's why when your kids go to school, they're teaching them to be consumers. They're not teaching them to be producers or investors or entrepreneurs or owners. They're teaching them to like get a job and buy stuff. Right. And so that programming is so deep. Rockefeller, there's all these quotes about and I don't know how deep that conspiracy theory goes, but I don't doubt it. There's all these quotes about Rockefeller saying, look, I don't want a nation full of people that think for themselves. I want a nation full of people that will get up and go to work every day. That's why they invested so heavily in that public school system. So it worked, right? So what saved the economy, what kept the economy going is that the American consumer will spend, 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 and they will spend even when they don't even have the money to spend. So as a result of that, the spending stayed high, even as income stayed flat. And what happened to make up for the difference is that credit card debt reached a record high, car loan debt reached a record high, student loan debt's at a record high. Just any type of debt that's out there is at pretty much a record high. And so now so now that they've successfully done this, right? They were able to cool down inflation without killing the economy because consumers were so determined to spend. So now where are we? Well, we're at a point where miraculously, and I didn't even believe this was actually going to happen. We actually hit an inflation rate that is slightly above the target rate. The target rate for the Fed is like 2%, 2.5%. And I remember thinking, a couple of years ago, like, it's going to be really hard for them to get to 2%. That's going to be really tough. And they did it. They got to like 2.8, 2.9, 3%, something like that. That's amazing. That's absolutely amazing. Now, here's the thing, though. There's a difference between deflation, where inflation actually drops, versus where inflation actually disappears and prices really go down, versus disinflation. So disinflation is what you actually have. You still have inflation. You just don't have as much inflation as you had before. So the prices at the grocery store are still going up, they're just not going up as fast as they were before. It's like if you're in a car, there's a difference between stopping the car and going backward versus simply slowing the car down. You slow the car down, you were going 80 miles an hour. Now you're going, 50 miles an hour. You're still moving forward. But that's very different from stopping the car and turning around and going in the other direction. That's what deflation is. Deflation is stopping the car and going in the other direction. Disinflation is where you're simply slowing down the car, but you're still headed toward the same destination. So inflation is still here. The prices of everything almost everything will continue to go up there, but remember, it's not uniform. So there's some areas where prices are going up faster than others. Some areas where prices are actually going down. The inflation number is a metric that measures across the entire economy. So inflation has been dealt with. Now, what's the next bear? Well, the next bear comes from what they call the dual mandate of the Fed. The Fed exists for two key reasons. They have two mandates that they just made up out of the blue that they decided would be the most important priorities for the Fed. The dual mandate is one, to keep inflation at a target rate of 2%. And number two is to have an economy that has full employment. Full employment means everybody that wants a job can get one pretty much. Now, what it does not capture is what are the quality of those jobs. And this is where America is getting into trouble, is that we have a lot of jobs, but what are those jobs really paying, right? That's why you see so many people out here that are working full time, that have, plenty of work opportunities, but they're barely getting by. Well, because there's no mechanism in place forcing wages to stay above a certain level. They just say, okay, we've just got jobs, right? So all these jobs might be like jobs at Dairy Queen and stuff, but they're like, yeah, but if you want a job, you can actually get one. But you're like, well, how can I afford to pay my rent when I live at Dairy Queen and I live in New York City and the rent is $2,500 a month for even an average apartment? Well, that's a problem that it has not been addressed. I don't think it's ever going to be addressed, and that's just the honest to God truth. Okay, now let me answer your question, Nelly. Okay, so you're asking a question about the financial consciousness training. Yes, it starts on January 1st. We're going to go 30 straight days every morning at 10 a.m. Where we're going to go through this book that I have. Is called 30 Days to Black Wealth and Power. It's a financial consciousness journal where every single day we will fill out a page in this journal. And if there's going to be a key question, you'll answer that day. That'll help you to elevate your economic awareness, understand where you are, how you got there, where you're going, how you're going to get there. And when you're done, you will have a plan that will have 30 pieces to it that you can then apply to get yourself where you want to get to economically. You will be at that point after this 30-day training, you will be more educated financially than about 95% of the population. I guarantee it. And so effectively, if you want to join this class, just for anybody that hasn't joined, there's a couple ways you can join. One is you can actually purchase the whole class for the whole full price of $299, which would give you lifetime access to the classes and all the recordings, as well as the book and everything else. Okay, so that's the $299 option. Now, if you want to just join the live sessions only, then all you have to do is buy the book. So if you buy the book, you can get in for just the cost of the book, which is $24.99. However, that does not include the recordings and everything else, right? So it's not like you have lifetime access to the stuff forever. That would come with an extra fee. Okay, so that answers that question there. If you want to join, a couple ways you can join. If you want to just join the live sessions, just go to drboycebooks.com and get a copy of the book, 30 Days to Wealth and Power. And in fact, I would suggest everybody just do that for now. And then once you get in there and you see, if you feel that the quality of the material is at a level that you where you can appreciate that, then I'll give you guys the link to upgrade if you'd like to actually purchase lifetime access. You can share it with your friends, your family, your baby daddy. It's yours for life. Okay, so that's the plan. And we're sticking to it. And also, actually, today at noon, I just sent you guys out a text message for the Black Wealth Training Camp for Children that's going to happen today. Actually, for 3 straight days, we've got about 50 kids in there. I think we're pretty much maxed out for now. So I don't know if there's any more slots left, but we're doing a 3-day training with Asia Kirkendall, who wrote a book called Quantum Wealth Theory. She's one of our faculty in the Black Business School, and she's going to work with the kids to get them ready. Because one of the missions that we have in the Black Business School is to train the kids, because you're getting your soldiers ready for battle. We need them to be prepped up, ready to go, on top of things. I don't want them showing up a day late, dollar short, half drunk, not knowing what's going on in the economy. I want them to be fully aware. I want their economic awareness to be higher than it was for us, because that's one of the reasons that many of us had to struggle for a long time before we figured things out. I don't want your kids to struggle. I want them to start the game ahead. That's where the Donald Trumps come from. Donald Trump had a lot of wealth. in his 20s because his father had a plan for him in the 1930s and 1940s. You may not like Donald Trump at all, but I read his whole family bio, his whole family history. And let me tell you, there's a difference in terms of how wealthy families get their kids ready for the future versus people that don't do the same thing. So that's my 2 cents. All right. So let's see here. Let's see. Shannon says, Kendall Green, not fully understand you fully. I like to buy the put to sell it. My terminology may be off. Yeah, selling puts is basically like providing insurance. Buying puts is when you're buying insurance. Let's see. That's my problem, Dr. Boyce. I have a ton of opportunities for jobs because of what I do. Pay is good, but reality is paycheck comes in and goes out. Yeah, yeah. That's where here's the thing. One of our faculty, Julian Gordon, who's our dean of real estate, he made an interesting point. He said that most black people have no income. And I said, well, what do you mean by that? He said, well, if you look at a corporation, net income is measured by your revenue minus your expenses. So whatever you have left over after your expenses is your income. And he said, well, think about all the people that live paycheck to paycheck, where their expenses matches their revenue. You make $1, you spend $1. You make $10, you spend $10. Well, then at that point you have a zero income. You have no, if you were a corporation, you'd have no profit. You have no income, and I think that's an interesting way to kind of look at it. But I think if you look at it that way, it helps you understand something that's extremely important when it comes to wealth. What's the difference between rich people and poor people? It's a basic question. Gets a basic answer. What's the difference? How do you know? How do you know the rich guy from the poor guy? Well, I don't know. Let's figure this out. Let's take money out of the equation. Let's go back 100,000 years ago, before you even had money, before money was invented. How did you know who the rich person was and who the poor person was if there was no money? Well, you would look at stuff that they have, right? You say, oh, well, he's got a lot of land, he's the rich guy, or he's got a lot of connections. That person's very rich and very powerful. That person has a big family. Maybe big families might make you kind of wealthy, right? In the sense of being able to move your weight around, do what you want to do, right? Wealth is kind of connected to freedom. Wealth and power and freedom are all kind of connected to each other. It's hard to have freedom and power without wealth. It's hard to have freedom without wealth and power, right? It just they kind of go connected, right? So if you now attire, now somebody mentioned attire, that's a great point. Attire, no, you can borrow somebody's clothes. You can go and just put on a nice outfit and look rich, and that's one of the things that happens even to this day. A lot of people look rich but aren't rich. They're not financially secure. Well, a lot of the reason that you know that people are wealthy versus not wealthy is accumulation. They've accumulated stuff. They have a pile of resources, right? Like if I have a bunch of land or a bunch of cows or a bunch of apple trees, or something, then you say, oh, he's rich. Look at all those apple trees. Look at all those cows he's got. Look at all that. Look at all that food he has, right? And so in order to be wealthy, and to have the financial security that comes with wealth, you have to have what in economics we refer to as an endowment. An endowment is just a bunch of stuff that you have that you can use to achieve your goals or to defend yourself or to help you get through a rainy day. I went to see The Color Purple last night because my wife and my daughters and my mother-in-law made me go see it. Y'all know, I have political issues with that movie just because I don't like I don't get me wrong. It was a great movie, by the way. Excellent acting, excellent choreography, singing, dancing, all that was on 10. Just the idea of black women getting together with white guys and kind of making a movie about how terrible black men are. I don't like that because I don't feel like I deserve that. I'm not the I've never been the man that wants to beat up a woman or do assault her in some way, right? So I kind of think we have to be careful about media portrayals of black men. That's my belief here. However, um, one thing about the movie was there was a part where where Mr. was where the guy was asking for Mr. His daughter's hand in marriage or something. He wanted to marry not Celie, he wanted to marry Nettie, the pretty one, right? Or the prettier one. Not that Celie wasn't pretty, but the narrative of the movie was that Celie was not as pretty as Nettie. And and the father was like, he's like, I'll give you Celie for a cow. I think he said a cow and a couple apples. He said something crazy like that, right? And effectively though, that was part of the endowment process actually for marriage. Like people would literally trade other human beings like that. Like they would literally say, you know, what's your dowry or your endowment? Like what do you have? And the more of an endowment the guy had, the more he had access to who he would want to marry, right? And now, obviously, in the color purple, it's pretty primitive, pretty terrible, but this is something that still happens to this day. A man who is wealthy, who has resources, nobody's surprised when the fat billionaire marries the supermodel. Nobody's surprised when the fat, ugly billionaire marries a supermodel. Am I right or am I right? Right? Well, why does that happen? Well, because for thousands of years, the people with the endowments could kind of get what they want and do what they wanted to do, right? And within limits, of course, unless you're Diddy, which in case he felt like there was no limits, in which, but now he's finding out that there are limits, which is interesting, right? And it's going to cost him financially. But the key idea is this. Here's why I want to bring it back to you and your kids and your grandkids. Is that so? If you want your kids and your grandkids to be financially secure, you have to give them an endowment. And the way an endowment is built is it must be built through some form of surplus. This is where basic ideas, corny little concepts like living below your means is really important. Well, what does that mean? Well, living below your means means that that the amount I make is not equal to the amount that I spend. I spend less than I make. Well, why would I do that? Well, because then I have a surplus. Well, why would I want a surplus? Well, because the surplus can be funneled into a bucket to create an endowment. Well, why would I want an endowment? Well, because once I have an endowment, I'm officially rich. Do you understand? Once I have an endowment, I have financial security. Once I have an endowment, I can make moves. I have money, power, and freedom. Right? You know, there's things I can do now at 52 as a man who has lots of investments. I own real estate, stocks, everything else. I can get things done that I could not have gotten done when I was 22 years old and I had nothing. So our simple power play in the Black Business School is very basic for you. It is put your kids in a position where they have that wealth and power early as opposed to getting it late. But this requires a shift in the way you think about wealth. It's not their job to create their own endowment. You had to create, if you have an endowment or as you're building one, you have to do it yourself. And you're doing it within one lifetime, which makes it a really much more difficult task for you, right? Because you're 50 and you're like, gosh, I don't have much time. I got to hurry up. I got to rush. Got to rush. But what if somebody started building your endowment when you were 4? Or what if somebody really had a vision and started building your endowment when you were -4, when you were -20 years old? I tell our son at 20, I tell him, start investing now for your children that are not yet born. They're going to need money. They're going to exist one day. So the best gift you can give them right now is to invest right now. So that by the time by the time your unborn child is 20 years old, there would have been 30 years of time spent accumulating this massive endowment for him or her that would allow that person to have a tremendous amount of financial security, a tremendous amount of economic power, a tremendous amount of freedom. They literally they're coming into the game ahead. They're coming in like Donald Trump did. That's what Donald Trump's story did not begin when he was born in 1946. His story began in 1920 when his father Fred decided to stop fixing houses for rich people and decided instead to start buying houses for himself and owning real estate. So by the time Donald was born, his father was already wealthy. By the time Donald was a 25-year-old man starting his life in 1971, 72, his father said, here, son, here's $20 million. Go conquer, go take over the world. So what Donald did in his 20s, instead of spending all his time struggling, paying back student loans, trying to get his first job, he was buying a $400 million hotel. That's what he bought. I forgot what it's called, but he bought a $400 million hotel in 1978 or something like that. And then at that point, it's kind of off to the races. A few years later, he's running for president and all that stuff. So you got to give your kids kind of a head start. And this requires a massive shift in culture, a massive shift in thinking. That's what I focus extensively on in the 10 Commandments of Black Economic Power. If you haven't gotten a copy, it's at drboycebooks.com. There's lots of books there. We even have copies of Powernomics and stuff like that there. So feel free to go to, but if you get Powernomics, get that from Dr. Anderson, though. Go to powernomics.com. But if in case they run out or something, we do have a supply at drboycebooks.com. So feel free to take a look at that. Okay. So let's get back to a few more things going on with the economy. So the big thing to watch for this year, the thing about the economy this year is that there are people that believe that this is going to be a great year for stocks. just like 2023 was. Most experts that I trust are very bullish, meaning they believe the market's going to keep going up, but they see a lot of risk factors. AI is seen as a massive growth driver over the next 3 to 5 years. If you listen to people like Kathy Wood, they're talking about AI like it's just going to, skyrocket productivity and skyrocket earning potential of major corporations. I don't doubt that's going to happen. But with AI, there is some, uncertainty, in terms of like whether or not AI will generate the revenue that people expect. Everything's about expectations when it comes to investing. And then also they've got these lawsuits where, all these authors now are banding together to sue OpenAI and stuff like that for like looking at their books and using their books to generate, data for these what they call them, not language learning, learning language. You know what I'm talking about. I want to say language, but why am I not finding the right words? Y'all got to help me. Like I know the word language is in there. What do they call it? Language learning or gosh. Anyway, I'll get back. I'll come back to it. Okay, so that's one factor, right? But then also when you're talking about what's going to happen in the future, another area that I think is language language algorithm, natural language. No, it's something else. It's language algorithm or language. See, crap. See, now you got me like hung up on this. All right, so I'm gonna just move on because obviously I can't find my words after Christmas. All right, so no, it's not language acquisition. It's oh man, I'm not. I refuse to even talk about this anymore. We're gonna move on. We're gonna move on because now you're gonna get me hung up. All right, so let's move on to another area that I think is a great investing opportunity is Bitcoin. What I'm gonna do with Bitcoin really quickly is tell you. First of all, I'm gonna tell you. I'm gonna give you the short answer, which is that if you want to know if I want to buy Bitcoin, the answer is absolutely yes. I love Bitcoin as an investment. I think Bitcoin is going to be awesome long term. Now here's the other thing though. I said I think it's going to be awesome long term. I cannot guarantee it's going to be awesome long term. Okay, give me a guess if you understand that. I want to make sure you understand the difference. There's no finance professor that's ever had a crystal ball that could predict exactly what an asset's going to do. However, let me give you some pros and cons to Bitcoin that'll help you understand the landscape of the risk landscape for Bitcoin and things you want to kind of consider as you choose whether or not you'd like to invest. Okay, so the pros of Bitcoin kind of lean into the fact that Bitcoin, just in its very nature, it's a beautiful technology. It's got the decentralization. The supply is limited. It's not like your regular currency where the government's literally printing money like crazy. I think you need a hedge against that. I think you need a hedge against your government because your government is working against you when it comes to wealth. They are printing way too much money. They're spending way too much money. They're going way too deep in debt. The dollar is not going to maintain its strength, particularly when you talk about threats like BRICS and all that stuff out there. Even though the United States does have the most productive economy on the planet, the US, our government is so dysfunctional, it's just sick, right? So some hedges that you could have in place might be something like a Bitcoin and ownership of things like gold. Gold is a good hedge. Real estate is a good hedge because God's not going to make more real estate. So ownership of land and property, if you can do it, is good. If you can't own land and property outright, you can buy shares in real estate investment trusts. If you go into your app and you look up REITs, REIT, real estate investment trust, you can find plenty there. Also, as more people adopt Bitcoin, as more people start using it, once they find more use cases for it and institutional investors start getting involved, I think that's going to be a catalyst to the upside. That's going to push Bitcoin prices up. Number three, it's well, I mentioned it's a hedge against inflation, so we talked about that, right? So actually that is number three. Now, here are some of the cons. Here are some of the problems with Bitcoin. One is regulators. Remember, your government is sometimes your friend, sometimes they're your enemy. In the case of Bitcoin, they could become an enemy because their crypto regulation has not been very good. They're just not very good at sort of just being clear about, what's a commodity and what's a security. That's what it all comes down to. And it comes down to this thing called the Wells test that they do. And they're kind of like accusing all these cryptos of being accusing them of behaving like securities when they never gave them clarity in the first place. I had a bunch of money locked up in Ripple or XRP for a long time because they decided to backtrack and attack Ripple for being a security. when Ripple had tried to get clarity from them. They had tried to say, like, hey, what do we do? Like, are we doing this right? And I don't know why they do it this way. It's very, very strange. But finally, the lawsuit kind of eased up and the price of XRP shot way up. And I just sold a bunch of my XRP. I didn't maintain ownership of it. But still, though, the regulatory risks are massive. So you got to be careful about your government. Also, cryptos are very volatile. So this is one of the reasons why I'm not a fan. When I hear people say things like, I sold all my real estate and I traded it in for crypto, or I quit my job and I'm living off my Bitcoin or whatever. I feel like that's very risky. I cringe when I hear that. I don't think that's a safe strategy because it's a very volatile asset. It's very new. It's very, very immature. And what happens with financial scientists like me is that back when I was at Syracuse University, what we would do is you look at data to understand the nature of an asset. You know, it's like when you make a new friend. When you make a new friend, you're collecting data. You're seeing how they respond to different situations. You're spending a lot of time together. So that person you've known for 30 years is very different from somebody you met 30 minutes ago, right? So Bitcoin is like the friend you just met 30 years ago, 30 minutes ago, whereas stocks are that friend that you've had for 30 years. And more specifically, we've been studying stocks for over 100 years. So we have a lot of data. We kind of can look at the data and run a lot of tests to know what stocks do in different environments. We don't know this about Bitcoin or crypto. Nobody really knows. So it's a new opportunity in the sense that it's a chance to really make you rich if you're smart about it, if you're careful with it. But it's also a new threat where it could make you poor if you're not careful. So don't be that person who trades in all their property and buys Bitcoin instead. Next is there, if there are other technologies that come out, other competing cryptocurrencies that become as well branded as Bitcoin, that do a better job of taking these transactions than Bitcoin does, then that could also be a problem. Because right now Bitcoin is kind of the darling. It's kind of the first mover. It's the institutional investors' greatest interest. So when the institutional investors, the big banks, start pouring into crypto, they're going to aim for Bitcoin first, right? But what if that changes? What if suddenly Bitcoin's not the it cryptocurrency anymore? Then at that point, that could affect the price. Now, one other thing that I was really looking into is some of these weight loss drugs. I don't know if you've seen this or not, but there's a lot going on with Eli Lilly and some other companies that, like, I know that they have this other drug called Ozempic that's out. That's not an Eli Lilly drug, but these weight loss drugs, that's going to be a massive industry. Now, a lot of these stocks have shot up like crazy. But if they take a little bit of a dip, like the Eli Lilly's, et cetera, will take a dip. I don't know who makes Ozempic. Let me see if I can figure out who makes Ozempic. But these drugs are kind of hitting the media. I saw where Oprah mentioned not too long ago that um she said something like it's time, we got to stop shaming people for taking weight loss drugs or something like that. And Oprah's a smart person. She's very calculated in how she makes her announcements. And it was ironic that she would make this announcement as a person who owns a lot of shares in Weight Watchers. Weight Watchers stock was doing really well. I made a lot of money on Weight Watchers stock when Oprah bought into the company. And then thank God I sold my Weight Watchers stock, because Weight Watchers stock has been kind of plummeting like the last couple of years. But what really is emerging is like these, from what I've been reading, these diet drugs are just killing the market. Like they're just they started off like it's a diabetes medication or something, and for whatever reason they found out that people could lose a lot of weight really fast, and they say it's healthy. I don't trust big pharma, to be honest with you. I think they unfortunately, the financial incentives kind of put your health secondary. I believe in long-term testing. I don't know if enough has been done, but if you're interested in it from an investing standpoint, there is a lot happening in terms of dietary drugs, and I would pay very close attention to that. Big pharma is always going to find a way to make their money, and that's something that is worth paying attention to. Now, what's my thought on the Grayscale Bitcoin ETF? Um, I don't know much about it. I just know that um, I don't think that there is a spot Bitcoin ETF yet. There's only the futures ETF. And so you can trade on the speculation of future prices, but not on the spot price. So once the spot ETF for Bitcoin gets approved, that's going to be a big deal. Let's see, what was the real estate investing fund on the stock market? If you just search for REIT, REIT. I would look at maybe a real estate investment trust that's run by Vanguard or something like that. You're not going to do wrong with that. Now, Epic by Novo Nordisk, Ozempic. Okay, yeah, yeah. Thank you, Rosalind. I appreciate that. Yeah, yeah. So these diet pills and weight loss drugs apparently are going to be big, and they're really talking about this being like $100 billion industry or something like that. Okay, so let me look at your question here. Okay, Mike X says, "Hey, Dr. Boyce, happy safe New Year to you. My question is about the master limited partnership. Stock symbol is ET, and EPD's high yield, tax free income. A good set it and forget it long term investment." Okay, well let me take a look here. Let me grab my phone and try to see if I can give you my quick $2 assessment. Okay, so the ticker symbol is ET, like ET phone home. Okay. Um. Okay, wait. Are you sure the ticker symbol is ET? Because ET here says energy transfer. Um, and then let me see EPD. EPD says enterprise products. Hmm. Yeah, I mean, I like EPD. EPD is enterprise products. They operate as a holding company. They engage in the production and trade of natural gas and petrochemicals. Um, yeah, I mean, I wouldn't see any reason not to add it to the portfolio. Now ET, I don't energy transfer. I don't know if that's if you're talking about energy transfer, Mike, or not. Maybe just let me know in the Q&A section, and I'll look into it. Rosalind says, "I'm new to this program. I have about 1,000 to invest each month. What is the best route to get started? I'd want to invest in options at some point." Okay, great question, Rosalind. I would start if you go to okay, so you log in at the blackstockmarketprogram.com, the blackstockmarketprogram.com. There's basic stuff there. Like you get access to the Black Stock Market Weekend, which is where I break down an 11-step process for questions you can ask yourself to decide which stocks you want to add to your portfolio. It was a weekend event that we did and we recorded it. And if you log in at the blackstockmarketprogram.com, you have full access to that. Another thing you can do is that you could literally set up in 5 minutes is the $5 a day, $10 a day plan. That's more long term. If you go to blackwealthmasterplan.com, I give an explanation of that. There's a free ebook that I kind of provide for you guys where you can implement it pretty quickly. So go to blackwealthmasterplan.com. The other thing, now, if you want to get involved with options, well, we do with options, it's a matter of the buy or the sell side. Buying options can be very risky if you're talking about buying out of the money call options, especially options that don't have much time to expiration and they're out of the money, meaning they haven't hit the price that they have to go past for you to start making money. Buying out of the money call options is usually a money losing strategy. So I tend to sell out of the money call options because if one side is losing money, then the other side's making money. If one side, so basically one side's the gambler, the other side's the house. I want to be the house because the house always wins. But the house also isn't going to make big profits necessarily in the sense from an ROI standpoint, they're going to make consistent revenue, right? So the way I make my money is I sell stock options every single week. I have a bunch of stocks that I own, and I sell out of the money call options every week. I hedge my investments in a specific way. I pick specific stocks that pay income at a certain level. I have a whole little formula I use, and that's what we do in the Prime program. So if you're interested in that kind of thing, if that's something that you're interested in, feel free to go to drboyceprime.com. Or if you want to see a demo, you can go to boycewatkins.com. There's a training called How to Make Money Without Working, and you can sort of see a little bit of what we do. It's a great way to make income. But the thing about it is that every type of investment comes with risk. Never ever think that investing can be risk free, but if it's risk free, it's going to be reward free. I mean, meaning that your rewards are going to be much lower. But there are good risk free investments like treasury bills, or even with interest rates being higher, you can literally even put your money in savings accounts now and get a decent little ROI, right? Another great risk free investment is if you have high interest credit card debt, like if you got that credit card that you've been sitting on that charges you 20% a year, pay down that credit card debt. Now you're making 20% a year. You understand? Like, because you're paying down Instead of giving away 20% a year, you're keeping the 20% a year. That's the same as making 20% a year. Because remember, Ben Franklin used to say a penny saved is a penny earned. So the money you're not paying is like money that you're making. Do you follow? Does that make sense? Okay, so that's a risk-free way for you to get a massive, massive ROI, right? The stock market might pay you. Sometimes it doesn't. Sometimes it's great. Sometimes it's not. But those credit card bills are always going to keep coming. So by eliminating the credit card debt, you're making a guaranteed return on your money. That's one of the best investments anybody can make. Now, the debt I don't get rid of is like if you have low interest student loan debt or low interest mortgage debt, the rewards are not as great because the interest rate isn't so bad. So paying off high interest debt is probably the first and best investment that you can make. But you also have to think about other aspects of your financial security because it's not just about wealth and the whole accumulation process. It's also just liquidity, having cash flow. I don't care how rich you are, you need cash flow. You need cash to pay bills, right? So, selling stock options is a great way to pay bills. Now let's see here. Rosalind says, I'm in the Prime program and listen to one of your recordings every morning. Okay, good, good, good. So there is something in there, Rosalind, called Prime 101. If you want to get started, Prime 101, and I'm going to do another one soon. Prime members will get in for free. And so Prime 101 is where I literally start from the very beginning and literally show you exactly how to pick the stock, how to sell the options, how to hedge your position, how to sort of and reevaluate, reassess every single week, to make sure that you're getting your income. So check out Prime 101. Prime members have free access to that. Anybody else who's curious about it can go to drboyceprime.com, or you can go to my website, boycewatkins.com, and look at that training, how to make money without working. All that's in there, and it kind of explains things. All right, so let's see here. Justin says, I joined the Prime program. When's the Prime live meeting? We're going to have another meeting next week. We had one last week. We're going to meet again next week. And also, as a Prime member, you get access to a lot of stuff. So we do lots of stuff all the time, and we'll invite Prime members in. So Prime is kind of like an exclusive membership in the Black Business School where you get access to a lot of stuff to help you achieve your financial goals. Another thing that we're doing right now is a lot of you were asking about real estate. So I decided that I wanted to actually dig deeper into real estate and bring in some of my friends who are really good with real estate. And so we have something. If you go to drboycerealestate.com, you can do a month for free if you'd like to try that out. But in drboycerealestate.com, what we do is there's a whole curriculum there if you want to just get started in real estate and kind of understand the basics of it and all that. There's plenty there like right now. But then also what we're doing is once every 2 to 3 weeks, we're bringing a real estate expert in that does a live training in the program. So the next person is a man who actually does millions of dollars in commercial real estate deals. He's a great guy. His name's Cedric, and Cedric is going to break down how he does his deals, the ins and outs, everything else. Last time we had Chalet Camilo, who's the CEO of Prime, I want to say it's Prime Source Realty, but Vital Source. I think it's Vital Source Realty. And so she was talking about the real estate market and opportunities, and really gave some valuable information that people did not know about how to get that money, how to get that financing. That's one of the things I'm figuring out. This is, again, we have Black wealth scientists in the Black Business School. Again, Black wealth is not a mystery for us. The racial wealth gap's not a mystery for us. We know the answers to that. And one of the things that we figured out too recently is that the biggest challenge for a lot of our people comes down to a couple areas. One is just cash flow, just getting the cash that you need to make your financial moves, stuff like that. But then the second one is access to capital, which is connected to cash flow. Because what happens is that the reason companies die, a lot of people think companies die because they can't make a profit. That's not true. There are plenty of profitable companies that die. The reason companies die is more likely linked to the inability to have the cash flow they need to pay their bills and their expenses. Well, the ability to have the cash flow that you need comes down to your access to capital. If it weren't for access to capital, Uber would not exist. Uber would be dead. Well, why? Well, because Uber lost $8.5 billion just 3 years ago. Think about this. How unbelievable is it that a company can lose $8.5 billion just from day-to-day expenses and still be in business? Well, they can do that because they have access to capital. Amazon wouldn't exist if it wasn't for access to capital. Tesla would not exist if it wasn't for access to capital. I could keep going down the list. So Apple, there was a time where Apple was not making money very well. Steve Jobs was struggling. They were really having a hard time with Apple, but they were able to survive because access to capital allows you to buy one of the most important commodities in all of finance, which is time. So when you get access to capital, you can get more time, and you can say, "Hey, look, handle my short-term obligations. Just give me more time. Eventually, I'll turn this into a profitable company that will have an endowment." Remember, we go back to that word endowment that will allow us to be, in that category of rich people where we can actually be the bank for somebody else. Do you understand? So access to capital is critical. So what we did this year, and one of the big things we're doing this year in the Black Business School, is that we're forming a partnership with a company called Nove Financial that is basically going to create avenues for you to get access to capital. They've got these relationships with banks, and so for a lot of you that are looking for either access to capital to make personal investments or purchase real estate, etc., or those of you that have businesses that need access to capital, they're really good in the whole space of business funding, business credit, individual funding, stuff like that. So we're working with them in 2024. That's kind of the big thing that's happening this year, because we don't just want to teach you what you need to know. We want to give you the tools and the opportunity to kind of get that done. So that's going to be the next big thing that we're doing, in addition to our trip to Egypt that we're taking in the fall. But I think that trip is sold out, so I don't want to talk about it too much because I don't want to make you think that the space is just wide open, because I don't think it is. I think it's maybe a couple slots or something. So anyway, with that being said, let me answer a couple more of your questions, and then we can do an hour for today, because actually my head's hurting a little bit. I don't know why. How do you feel about Solana? Solana, that's a crypto, right? Okay, so Solana, um, as far as cryptos go, yeah, I mean, Solana's done really well. Wow, it's 884% in the last year. Sheesh. I've heard good things about Solana. Let me just say that. I don't own a lot of it, but I've heard good things about Solana. So I wouldn't be mad about ownership of Solana. That's my 2 cents on Solana. I'm more of a Bitcoin Ethereum guy because I kind of got traumatized by you know, by what happened with all these other cryptos. So that's the thing about investing. Never think that investing means you're always just making money all the time. No, investing means that you have a bunch of assets and a bunch of investments, and some of them do well, some of them don't. And it's like a lot like running a business. What I learned is that for investors and business owners, you never have a time where everything is okay. Tishana's telling me I should is that let me see. Tichawana, I'm sorry, is telling me I should drink water. So let me do that. See, I'm smart. I know I listen to it. Are you a black woman? I think you're a black woman. If you're not, then I apologize. But I learned a long time ago to listen. Oh, a man. Okay. Sorry about that. So I've learned to listen to smart black people. So I literally, he's a chemist. Okay. Well, so he's a real smart black man. Okay. Well, thank you for the suggestion. So now hopefully I'm fully hydrated. You saw me drink that whole bottle of water. But okay. So yeah. But I noticed that being a business owner and an investor kind of means that you're never at a point where everything is going 100% good or 100% bad. Um, when you talk about how investing works, you're basically kind of always in this like state of flux where some things are going good, some things are going bad, and you just sort of understand over time what they call SWOT analysis: strengths, weaknesses, opportunities, and threats. So you kind of say, okay, where am I strong? Where are we weak? That's always going to be true. You're always going to be strong somewhere. You're always going to be weak somewhere, and then you're always going to have opportunities. Meaning, areas where you can grow and make a lot of money, and then you're going to have threats where you have to minimize that, right? And this is always true. And so kind of getting used to operating in that space is important, because if you don't, then what'll happen is every time you see a threat or a problem, you'll freak out. Like your ability as an investor or as a wealth builder or as an entrepreneur, especially those of you that are seeking to be independent black people, which I think all of us should be. I don't think, slavery works out so well for us. And, you have to kind of, think about how you approach problem solving. Like this is something I think is really important and deep, and it's a subtle aspect of wealth building that never really gets discussed. Um, and this is actually something that I thought about because we created the Black Financial Therapy Department, and we're really deep. We're working with therapists because we're getting into like the mindset of wealth builders and the barriers that you face psychologically when you're talking about trying to build wealth, because it's connected to your perception of risk. And one of the problems that we found that African Americans have is that we just get scared easily because we've gone through so much. We're heavily traumatized. And I mentioned to you all that undiagnosed, untreated trauma is one of the biggest barriers to Black wealth that there is. It's hard for a traumatized person to take a lot of risks because you have an itchy trigger finger. You freak out fast, right? And you have all these trauma responses. You can't calm yourself down to focus on the task in hand, kind of sticking it out, kind of having those value systems in place that lead to these amazing outcomes, like getting rich and all that stuff. Because sometimes you have a really bad period where everything's falling apart and it may last for years. If you listen to the history of most great companies from Disney on down, you'll see where they've had 3, 4, 5 years where it could seem like they couldn't do anything right. And it's so if your mindset is one where you're easily scared and you say, oh, well, see, it's been going bad for a whole 4 weeks. I told you this was a bad idea. If that's how you think, then it's very, very hard for you to build wealth because you're not hanging in there to kind of get the big prize at the end. And people who think that way also have a hard time doing other things long term, like staying married. So when something goes wrong, they become a track star. They run off. They go on 3 dates with somebody, and one thing goes wrong, and they're like, "Oh, I had to cut him off because he got to dinner 5 minutes late." That type of thing. So effectively, yes, babe. Okay, I'm in class. You need me? Okay. All right. I'll talk to you in a little bit, babe. They always knock on my door. I have the sign on my door. I tell them anyway. All right. So here's the thing. Here's what I want to get to. If you're talking about trying to be a wealth builder and an investor, you really have to think carefully about um training yourself and training your children on how you approach problems. Think about it like this. I was a math teacher at the University of Kentucky, and one of the things I had to overcome in order to teach math at the college level is I had to overcome the natural anxiety that a lot of us have when you run into a big word problem. Has anybody ever had that feeling where you are taking a math test and there's a really long, difficult word problem? And the first thing you do is you freak out, you start sweating, and your heart starts pounding, and you just kind of like everything becomes a blur and you can't even think straight, right? You might know what I'm talking about. A lot of people have this anxiety. They get scared, like word problems just scare the hell out of them. So think about this. You can't solve problems when you're like scared to death. You're not thinking right, right? So one of the first things that has to happen before you even talk about how much skill you need to have is you got to calm down. You have to learn how to relax and say, it's going to be all right. This too shall pass. I'm going to be okay. The answer's in there somewhere. I'm going to figure it out. So literally, these things that we think have nothing to do with wealth and business are huge when it comes to being able to invest or build wealth. Because in business, the same thing happens. You run into this crazy problem. You're like, oh my God, Lord Jesus, what am I going to do? Right? That's what it is hard to even do that. Like I find myself, because I learned how to kind of calm my nerves and solve problems, I get rattled when I'm around people who panic easily. I don't partner in business with people who panic easily because that's panicking is never going to solve the problem. But in our community, if you notice, culturally speaking, we're really trained to panic. We're really trained to get scared and scream and whine and cry and everything else. We're really maybe just relaxing, calming down and saying, okay, what's the solution here? What are our options here? How do we figure this out? That is huge when it comes to investing in business, because you got to be able to kind of settle that storm internally. And where I picked up that skill was when I was working on my master's in math. I remember that they used to give us one problem a week that we had. So there was one class I took called real analysis. They would give us one problem a week. And in that, this one problem, it might be a short problem, but I would literally read this problem and it would be like reading Chinese. And I'll be like, how in the hell am I going to get the answer to this problem? I have no idea I don't even know where to start. Right. And what would happen is but you knew you had to do it. So I would start talking to people. I would read it 50 times to try to pick up any little details in it. I would sleep on it and think about it. I would meditate on it. I'd be thinking about it when I went to the bathroom, when I was walking down the street, right? And next thing I know, each day I would get a little closer to the solution. Each day I would have a little breakthrough. And then by the following Monday, it like clockwork, it was like a miracle. I would always have the solution, like in time to turn in the homework. And then that's when I learned that something that most people do not know is that if you sit with something and just think about it and let your subconscious mind kind of marinate in it, you will gain insights into that thing that most regular people do not have. This is the art of becoming a deep thinker. So that's what I'm kind of asking you guys to do the impossible, to do something that a lot of people don't value in this society. A lot of people don't. They make snap judgments. They just try to they assess things very quickly, and they judge things really fast. But I'm asking you to do the opposite of that, which is to just sit on it, just think about it, just process it for a while. Just say, I don't know yet. Let me think about that for a few days. Sometimes I might think about a problem. Literally, somebody might ask me a question. I might literally think about the answer for like a year. Like, and then be like, I was thinking about the thing you asked me about last year. I think I know what might be going on here. Or like when I teach a class, like there are things that I teach now that I've been teaching since literally 1993, like 30 years. And do you know that every time I teach those basic subjects, I come into a new insight that I did not have before? Right. So that patient thinking and that deeper thinking allows you to get some insights that help you come up with solutions that other people don't have. And that requires you to just trust the process. Right. So you got to trust the process. So I think with investing and wealth building, running a business, it's the same idea. When you're trying to do your thing, every day you're gonna have problems get dropped on your desk. And so you gotta and again, we have a whole Black financial therapy department around this. Actually, my wife is a therapist, so this is where we have an advantage. And actually, her website, if you want to take a look at some of her books, she has some good books. Her website, her name's Alicia Watkins. You can go to aliciawatkins.com to see some of her books, or you can go to coachingwithdralicia.com, where you can see what she sees her clients and all that stuff. So if that's of interest to you, it's coachingwithdralicia.com or aliciawatkins.com, either one. But I think that these sorts of little things, these are our superpowers. These are the areas, in my opinion, where if you master some of this extra stuff that seems like it has nothing to do with investing, you'll have a leg up on everybody else. Mindset really is everything, but it's deeper than just believing in yourself and little basic things like do your best. Like all those things apply, but it's really also about sort of assessing culture, assessing habits, assessing patterns, assessing how you approach things. That all that comes into play when you talk about this wealth building process. So that's it. I'm going to answer a few more questions before we bounce on out. Let's see here. What about UONE? Oh, you talking about Urban One? I don't like the stock, honestly. I owned it years ago. It hasn't done much of anything. It's just been kind of a garbage stock for the most part. I hate saying that about a Black owned company, but honestly, they're not really Black owned if you really look at the details of it. So yeah, there's nothing special about Urban One in my opinion. And I don't want to say it like that. I support a lot of Black owned businesses, but once I kind of started seeing where there were Black people with the company who were actually suing. From what I understand, there was a Black person suing for racial discrimination. And I was like, well, how does that happen? And then I looked at like the management, and a lot of the middle management was like people that weren't Black. So I don't understand it. No disrespect to Kathy Hughes, so I know Kathy Hughes runs the company, and I'm not saying they're screwed up or anything. I'm just saying there's nothing really special about this stock, to be honest with you, in my opinion. Eric Travis. Hello, Dr. Watkins. Does the Black Business School have an accountant? I want to open a traditional IRA. Yeah, we do have an accountant. Now, she's super busy. I don't think she'd be a person that could work. I mean, she's actually leaving. We're actually having to get a new accountant because she got a job making like insane amounts of money, and I was like, we can't pay you that much. But she's that good, and I understand. I'm completely happy for her. Now, but if you do know a good accounting firm or a good bookkeeper or a good accountant that would like to apply for the job, just send an email, send your resume to support@theblackbusinessschool.com. That's support@theblackbusinessschool.com. We are on the market for a new accounting team. Let's see. What about MRVL? Is this a 15-year hold? Okay, MRVL, Marvel. Yeah, I've looked at that stock before. Let's pull it up again and see what we see. MRVL. Marvel Technology. Yeah, yeah. I think that yeah, I have a good feeling about this stock. It's done really well the last 5 years. It's gone 300%. I like it now. Yeah, I like Marvel. That's all I'll say is yeah. I wouldn't knock you for owning that. Okay. Now let's see. Someone's asking about a bunch of stocks. I let's do one or two at a time. Let's see. What about SQ, MAMA? Okay, I need to buy stocks under $20 for a 20-year hold. Do these stocks qualify? Let's start with SQ. Um, okay, so SQ. Okay, that's yeah, block. Yeah, I think SQ would be a good 20-year hold. Is Nvidia going to go up to $900? And if so, should I at least buy a few now? You know what? I'm gonna tell you, I owned Nvidia before it took off. I'm not comfortable buying a lot of Nvidia at the current price right now because there's so many things that have to unfold with Nvidia for Nvidia to fulfill its massive promise of being this unbelievable stock. I mean, this freaking thing has gone up 1,400% in the last 5 years. In most cases, stocks that do that, they don't keep on going up. A lot of bulls, though, they kind of think that Nvidia's first mover advantage in the whole AI space is going to hold. If you believe that, then you could buy some shares and have it in there, or maybe wait for a pullback. But I feel like Nvidia, I don't. I feel like there are better investments out there than Nvidia. But Nvidia, I mean, if you're looking for good companies that know how to make money, you don't get much better than Nvidia. Angela, what are your thoughts on Disney stock? Oh, screw Disney. I hate that company right now. They're so messy. They're not performing at they're not their best version of themselves right now. There was a time where Disney was just one of these beautiful companies that just ran very, very well. And unfortunately, they're also a company that has the capacity to get so bogged down in bureaucracy and infighting that they end up making tragic corporate mistakes. So some mistakes that Disney has made in the last year that are basically unforgivable, which really makes me understand why Nelson Peltz and other investors are just so angry at them, is number one, they got involved in politics. They got involved with they had that whole bill. They call it the Don't Say Gay bill, but it was never called the Don't Say Gay bill. It was basically, kind of, I guess, something that where conservatives felt that, you shouldn't be exposing children to certain concepts when they're young, right? Related to sex and stuff, whatever it was. But either way, Disney took a stand on that bill and said, we're mad or we're not gonna. I forgot what they did. They did something in protest, and that created a feud with the governor of Florida, Ron DeSantis, which did not work out well for Disney at all. It made them look very, very bad. And most companies that got involved in politics, from Disney to Budweiser to Target, all suffered tremendously because you can't alienate half the country, no matter how crazy you might think they are. If you're selling hot dogs, focus on selling a good hot dog. If you're selling Disney World tickets, focus on selling Disney World tickets. Stop telling people that they should be Democrats or Republicans. That's a huge mistake in this country, in my opinion. The second thing they did that was crazy is that they screwed up what I thought was the business opportunity of a lifetime, which was streaming. Because they went in with this grow at all cost mindset and they were overspending on all this content, they ended up shooting themselves in the butt with streaming, to the point where streaming, not only did they not make money on streaming, but they lose billions of dollars every year now because they have their streaming service. How could you mess something like that up? That was a golden opportunity for you to make a ton of money, but you did it wrong, right? You just could have kept your content costs down. So the third area that disappointed me with Disney was what was the third thing? Oh, yeah, you screwed up the Marvel franchise. Who can screw up Iron Man, Thor, the Incredible Hulk, and the Avengers? That was an ATM machine for them for a long time. But what happened was, again, they got political. They started pumping out movies. First of all, they were pumping out way too much content for the streaming service, everything else. So the viewers got bored. They couldn't keep up with the storylines. And then second of all, they started getting overly politically correct. They produced this movie called The Marvels, which is basically like the Avengers, except for teenage girls. And not to say that teenage girls can't be superheroes, they should be. But I got teenage girls in our house. Neither one of them wanted to go see the Marvels. That's how I knew that movie was going to be a flop, because I know teenage boys. We got a teenage boy in the house too. He wasn't going to go see that. He's the guy who goes to see all the Marvel movies. he wasn't going to go see the Marvels. So all you got at that point in our house are the girls, and the girls, they went to see Barbie. They didn't go see the Marvels. So effectively, it was just a bad decision, but it was one of many terrible choices made by Disney. That's why their stock has been flopping. That's why they've lost value for their investors. And they're just kind of an embarrassment right now as a company, in my opinion. I kind of feel like they should just be doing so much better. So I wouldn't give Disney any money for anything. I wouldn't even trust them. I wouldn't even trust them with money to go to the liquor store. They're just a garbage company right now. So there we go. So y'all heard me now. You've heard my Disney rant officially, because Disney was one of my favorite companies a couple years ago. I love the way they were being run 2 years ago, when Bob Iger came back and all that. Now, all right. Anyway, few more questions. Which index should I buy right now? I should have bought VOO 10 years ago, but didn't have access. Is it too late to buy VOO, SPY, and QQQ? No, no, no. All those are still good. Just never forget, right? Like sometimes we can look at something and we can say, oh, this thing is $400. It used to be $200. I missed my chance. Well, no, in 10 years, somebody's going to say, man, this thing is $2,000 and it was $400 back in 2023. I missed my chance. The thing is, you never miss your chance. With investing, you never miss your chance. There were people in the 1980s who saw the stock market, the Dow hit 1,000. The Dow's at 37,000 now. When the Dow hit 1,000, people were like, "Oh, I missed my chance. Dang, oh man." Or they were like, "Dang, a house in LA costs $90,000. I missed my chance to invest in real estate." No, 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 no. Don't look again. This goes back to investor vision. When I've talked to you guys about how to view the world like an investor, an investor shouldn't view the world from just one perspective. Like you shouldn't view the world as if you're sort of just thinking about the past and comparing the present to the past. You should also compare the present to the future. So you see this house is $1.1 million and it seems outrageous, but compare it to the fact that this house might be $2.5 million in less than a decade. At that point, it looks like a bargain. Everything's relative. I don't even know this, but the studies show that if you take a small number and put it next to a big number, it makes the big number look bigger and it makes a small number look smaller. So if you ever want a number to look big, then just put it next to a small number. If you want it to look small, put it next to a big number, right? So a lot of times what happens is that we think things are overpriced because we're always comparing things to the past. That's what we do. We compare 2023. All we can do is we only know how to compare it to 2021, 2020. But if you really have investor vision, you can start comparing 2023 to 2033. And then suddenly everything looks super cheap. So keep that in mind. Okay, let's see here. So what do you think about ALT? What would your put amount percentage? ALT. Let's see. ALT. Let me look up ALT really quick. I need to just go to the mall today and just bite the bullet and get me some new glasses because I'm kind of tired of taking my glasses off. Altimmune, okay, this is a clinical stage biopharmaceutical company. Okay, biopharmaceutical companies are very risky. The stock has gone up a lot in the last few years. The analysts seem to like it. Yeah, I like it, but remember with those pharmaceutical companies, it's very risky because they possess a lot of what they call jump risk. Jump risk is that a lot of their stock price is heavily contingent on some sort of clinical trial. So that means that they got some drug in development. And if it gets FDA approval, the stock price doubles or something. But if it doesn't get approval, the stock price might drop on you by 70% or something. So just be ready for that. If you're ready for that, then, why not? It's worth looking into. Let's see here. Justin says, my goal is to invest 50K in my portfolio for 2024. 24K will be in my 401K. 500 will be, and will be S&P 500 funds. What is your opinion on growth versus dividend stocks? Should there be a split? I think that growth stocks are definitely better if you're under, say, 55 years old. I think that as you hit retirement, maybe dividend paying stocks are better. But then the thing about dividend stocks is that, if you have to have a lot of money invested to be able to live off your dividends. So typically when you get a dividend paying stock, usually what most people do is they just reinvest the dividends anyway. So there's not a big difference there in terms of just overall income. But one thing about dividend versus growth stocks, it's not so much a matter of me telling you which is better and which is worse, because there's something for everybody. It's like it's like somebody telling you you should date a tall woman versus a short woman, or a big woman versus a thinner woman, right? Or a man with red hair versus a man with not red hair, right? It's all preference. Everything's preference. There's somebody out there for everybody. So with a growth stock and the dividend stock, it's not so much a matter of saying which is better. It's a matter of saying, here are the characteristics. You make your own decision. So growth stocks tend to not pay high dividends because they're growing, and they tend to be younger companies. They have a lot more upside. So you're going to get a lot more capital gains growth in good years. When the years are good, growth stocks tend to take off. When years are bad, growth stocks tend to crash, right? So they're kind of like teenagers, right? You know, like our teenagers, they're either exuberant and super happy, or they're depressed and sad and they think the world's coming to an end. A dividend stock is like an OG kind of stock, right? These are companies that are called cash cows. They've already done most of their growing. Like me, I'm 5'8". I'm hoping one day I'll wake up at 6'3", but I probably won't, right? I'm not going to grow, but I know how. But I'm consistent, right? I'm sturdy. I'm steady. I'm kind of know who I am, right? So a dividend stock is kind of like that, right? So these big cash cows, the Exxons and stuff like that, they pay the dividend because they're not planning to double in size anytime soon. So there's like a sturdiness and a stability there. But what you're giving up is you're giving up that growth potential, right? So the dividend paying stocks tend to be the companies you buy when you want to stay rich. The growth stocks are the stocks that you maybe buy when you want to get rich. Okay. And you're willing to take that risk that you might also get poor trying to get rich. So I think a balance is good. How the balance shifts depends on your risk preference and your age. Older people that are more conservative shift more toward the dividend paying stocks as they get older. But then again, you could take risk at any age. So it's up to you. All right. So let's see here. My opinion on MO. Let's see here. MO. MO. Let's see. Altria. Um, there's nothing special about it. There's nothing about it that makes me. I mean, if you add it to your portfolio, that's not a problem. But there's nothing about it that makes me say, yeah, I really would like to own this company. What about MAMA? Okay. So I see you asked about some other stocks, but we'll do one at a time. MAMA Mama's Creations. Okay, it's pretty low priced. Um, it's a young company. It's a small company. What do they do? They make the manufacturing distribution of beef meatballs. I don't know. I don't know. I mean, again, if it's just something you're adding to your portfolio, that's fine. But like Chipotle, CMG, that's a much more sturdy investment. If you only have $1 to invest and it's the choice between Mama and Chipotle, I like Chipotle. I made a lot of money with Chipotle. Let's see here. Any market where I can sell call options around the $12 mark. Uh, let's see. I can sell call options around. That's a tougher question because I need context on that, like what you mean by that. And also we're gonna do an options class soon. So if you're in the Prime program, then just look for your text message. Make sure you text the word options to 319, sorry, to 89748. Text options to 89748 so you make sure you're on the text list. And I will let you guys know when we have another Prime class. And also, if you're interested in joining the Prime program, where we generate income from selling stock options, just go to drboyceprime.com, or you can also see a little bit of what we do. If you go to boycewatkins.com, there's a training called How to Make Money Without Working, so you can kind of see what it looks like. Okay, last question, then we're going to bounce out of here. Jacinta says, other than Bitcoin and Ethereum, are there any other promising cryptos you like? Actually, Solana was the third. The rest, I just don't mess with. A lot of other, cryptos, it's not what it used to be. It's not a bad market, but I think that they're going to just end up weeding out so much stuff, and you don't know where the SEC is going to strike next. So I think Bitcoin, Ethereum, and Solana, those are my top three as far as crypto. All right, so I'm going to get out of here, guys. God bless you. It was great to see you. I hope that we gained something from this conversation today. And also, just a reminder, the wealth consciousness training starts January 1st. So if you'd like to join the live sessions, you can join just by getting a copy of the required reading. It's my book, 30 Days to Wealth and Power. And in this book, it's a reflective journal. So every single day, we're going to fill out a page on this journal. We're going to meet 30 straight days because it takes 30 days to form a new habit. And every morning at 10 a.m., we are going to do a financial lesson, and you can join live just by getting a copy of the book. Just go to drboycebooks.com, search for the words 30 days, and you'll see the book come up. You can join with either the ebook or the hard copy. The hard copy is going to take a few days to get to you. So, but if you get the hard copy, we'll give you the ebook as well. And then also, if you want to get lifetime access to the recordings and kind of have this forever, that kind of thing, there's an extra fee for that. And once we get to class, I'll give you guys some link to do that if that's of interest to you. All right. So have a good day, and good to see everybody. I'll talk to you soon. Let's see. Janet says, I didn't find the book. You should be able to find it if you could just go to drboycebooks.com, and there's a search box at the top. And if you go to the search box at the top and search for 30 days, just type in the word 30 days, and 30 days to wealth and power should come up. So let me see if I can share my screen and show you really quickly. All right. So here is drboycebooks.com, right? So this arrow, right? Or this, not arrow, this magnifying glass. If you click on this, and you type in just 30 days. So you see 30 days to wealth and power. So you got the hard copy book here, and you got the ebook here. Now there's other things you could take a look at as well if you want to, but if you get a copy of this book, and it's discounted to $24.99, and actually you can get an additional 30% discount by using the code word book club. So use the code word book club. It'll drop it down from $24.99 to, I think, $18-19, something like that. And you just click here and you can make the purchase that way. Okay. All right. So drboycebooks.com. All right. So have a good day, everybody. See you soon. Bye.